In today's Consumer Alert, mortgage rates rising again. According to Freddie Mac, the average rate on the 30-year fixed is 6.29%. That is up 0.3% just from last week. And experts warn if it reaches 7, the market could freeze. Joining us now, real estate expert Victor Caro once again to break down where we are. Good morning.
Good morning, Steve.
Do you agree with that? If it hits 7%, we'll be in a freeze?
Well, yes. So if we are getting to that right now, it's creating some uncertainty, and buyers have hit the brakes a bit because, obviously as the prices, they are maybe coming down a little bit, but with interest rates going up, it's causing affordability to be even tougher. And so, homes will stay on the market a little bit longer. And so that's what we're seeing.
It's been an interesting dynamic, right, the last couple of years as we followed it, because for a while, when interest rates were super low, people were just grabbing anything they could off the market, it seems. You just see a listing online and you buy it. You don't even go get the inspection or, in some cases, look at it. What has changed now as those interest rates have started to rise?
Sure. Well, with the homes now being on the market longer, it's allowing the inventory to catch up to the demand, and it gives buyers more negotiating power. So all of the bidding wars, we're still seeing some properties, if priced well and priced right, that there are multiple offers, but there's a lot less of that. And so buyers are getting the opportunity to now ask for contingencies like home inspections. They're putting in financing and appraisal contingencies, which we did not see at all earlier this year.
I know that the mortgage rates are really just one part of the equation when it comes to home buying, but if we continue to see increases like we've seen the last couple of months, what does that do for the market?
Well, we're seeing the prices on some properties starting to come down. And so we haven't seen prices go down in years, basically, right? So, but over the last couple of months with the interest rates up, we are seeing sellers reduce prices. We're seeing that basically the days on market are increasing. And what it means for sellers is really that the sellers have to be more realistic in their expectations, and pricing a home right is more important than ever. And just really adjusting the price to go with what's happening in the marketplace to make it more affordable for buyers to actually take action.
The price there, the interest rate that we mentioned earlier, the 6.29, that's for a 30-year fixed. For somebody who is getting into the market, maybe a first-time home buyer now, this is the time, right? They couldn't control when they look for a house. What do you recommend? Is there a way to get around that interest rate?
Well, there are the variable loan rates. So, for so long, the interest rates were so low that people were getting fixed rates. But now with the rates higher, the variable loan, the arms are back in. And so people are doing that. That's the adjustable rate mortgage. And, they get in there for maybe 5 years, 7-year lock at this rate. And then if the rates adjust again, they can always refinance. And so that's another way to just get in at a lower interest rate and then refinance. Is
that something that you think will take off? I guess the question is, if the interest rates continue to go up, we see more Fed rate hikes over the next couple of months. Do you think you'll see more people doing that?
Yes. And because really right now it's with rental rates, it's not like it's going down, and people still want to own homes. And so that's one way that they can get in, just creatively trying to get the lowest possible rate. So some people are buying down the interest rates by paying points, but the adjustable rate mortgage, locks them in at a lower, it's not as low as where the interest rates were before, but lower than what it would be if they got a fixed rate.
Sure. Take the financing out of it, and this might be the first time in a while that it could possibly be advantage buyer. As you said, houses seem to be on the market a little bit longer. Are we still seeing the cash buys we saw before?
Yes, we are. Actually, we are seeing investors, whenever this happens, investors come back out. Investors for a while weren't able to compete in the market, or they didn't want to because they didn't want to get into bidding wars. And cash wasn't king earlier this year. But now, sellers are seeing contingencies. So if a cash buyer comes in, they have more buying power. And, a seller would prefer that because they can do a quick close, and they can also, just not have those concerns of any contingencies falling through.
Sure. Certainly something to keep an eye on, like many people here in the DMV are doing just that. Real estate expert Victor Caro, thanks for joining us this morning. Have a good weekend.
Thank you. You too.